Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 2nd of August here in 2022. And for the 1st of the month, we'll take a look at the broader markets and get our August update. Called that the aftermath from August because we had the Fed, we had lots of major companies, tech and retail and financials report their earnings on last week, and we had the Federal Reserve. So let's pick up the pieces and discuss where we are as we start this brand new month. And again, this is going to be a top-level approach to where the markets are, starting with the S&P. Today's session was a wide range. We are getting this continued downtrend. It's still in a down market, falling trend, falling averages. And we are looking, I still am of the mindset that we're in a similar situation to where we were at the end of March into April earlier in the year. And that was a downtrend, continues, but went a little bit higher than we expected. And that's where we are, I think, at the current moment, just in broad picture framework. Inflation is still a concern. The market is still downtrending, but there has been a stellar, as we call it, bear market rally. So let's start from that. In terms of the S&P, that will still be the going thought process as long as the index. We have to be objective. This is not a future forecast. It is an objective look at the markets and where these things would turn into something a little more bullish. And we'll have to adapt, adjust, hedge, rehedge, or any other positions that would take place. And that is roughly in the S&P Futures 4200, which is going to take it just a little bit above where it was, about 46. I would say the same decision, the same plays, the same trades, the same hedging from 4600, and the move that took us back down is still valid and in play in the new month of August. In the Nasdaq, that's our technologies heavy, our tech-centric sector. That is the same logic, but it was down against 15,100 at the March to April. Now it's down against 13,100. Play would be to the downside, but again, risk is to the upside of a continued short squeeze or continuation of the bear market rally already in play, and the reward would be to the downside in the Nasdaq. So its key focal point going forward is going to be just shy of that 13,500, just like it was at 15,500 in earlier in the year. In the Dow Mini Futures, this one is just the 30 stocks in the Dow. Still has the downtrend, but still has a level or at least a price mean idea trade from 33,000 in the index, just shy of 35,000 earlier in the year. And finally, for the equity future products, the Russell, which is our RTY, our small cap index, it is playing down from the 1900 index level. Again, same logic with a sideways consolidation just shy of 2100 earlier in the year, and their reward is to the downside, their risk is to the upside, and that punched up a little bit higher before turning to make a new low. That is what is a potential outcome right here at the 1900. May see that Russell punch up above the 2100 to 2150. May see it punch above. Punch just means trade above, or squeeze above, or risk above 1900 toward 1950, and the play would again be bearish back to new lows. And that will all change, and we'll update on future videos if we do sustain price action above all of these highs. That's just a probability thesis going forward. In crude, we do see a cooling of inflation, and again, that's the big discussion point. That's the big focal of the economy, the Fed, and of course the market, corporate profits, and consumer spending. How high will inflation go, and is it coming down? In terms of crude, it is. And that sees the crude market move from 125 per barrel, a high inflationary read, down to 94. That's going to be similarly seen in commodities such as wheat. That's ZW here in Thinkorswim. And the peak of 1300, taking it back down, cutting that almost in half just in a few months. So these are things that I hesitate to use the word good or bad, but if you're looking for a break or cooling in inflation, these are the good things you want to see. Oil prices come down, wheat prices come down, all the other commodities as well trade lower. That would include all of the futures products that you might want to trade or at least watch to get a broader sense of the futures markets on inflation. So far, that's a good thing that wheat prices, in terms of inflation, are making new lows for this year. Outside of that, we have gold. And we'll pull this perspective. We've discussed this 1700 per ounce level just on the weekly chart. And that gave a better chance, a better probability of a play. Play just means a trade up away from 1700 back to the mid, which is 1800. So that's just updating us from prior videos with the odds favoring a bounce from 1700 all the way to 1800. That is complete. That is played out in gold. So that was a good opportunity, but it was an aggressive opportunity, and that played similarly in GLD, which we had discussed off the 160 per share level. So that has completed, at least at the moment. And we'll go back to the big picture to look at bonds. That's the other focal point, because bonds, like the equity market, broke the downtrend. Is that just a bear market rally or the beginning of something bigger? That's always what we're asking as traders, and our positions come from that perspective. Hedging the risk of an upside break, upside reversal, and that would put the bond market, TLT at least, pushing up away from 120 toward higher prices such as 130. But in the grand play to the downside, 120 would be that dividing line in the sand, as it were. The odds may favor a new push to lows to continue the downtrend in motion. And what does that mean over on the yield side? The yield is what we continue to focus on because the Fed is raising rates, and they are doing so to combat inflation. Now, the Fed does not control the 10-year Treasury note yield. The market forces do that. They control the Fed funds rate, and they've been raising it. But the 10-year Treasury note yield, that is at the 3% boundary. 30 means 3%. And that's where the yield has stabilized and then turned down from. Yields are going to trade opposite of bond prices. So 3%, 30 on the index, but 3% of the TNX will continue to be our focal point for bear against and then continued upside action if it does punch or pierce or trade above that 3% level. Same logic for ZN, and the same price. We would look at TLT as a tradable ETF. This is the futures market for the 10-year Treasury note, and ZB would be the 30-year Treasury bond, also breaking the trend, downtrend, to the upside. That's where the broader markets stand and the markets that we cover. Any other major developments? Well, XLE, looking at inside the stock market, XLE is going to be our energy sector, and that would tie somewhat similarly to crude oil, which is also similar to the energy sector. Now, these are stocks that are within that sector or within that market. That would include CVX, just had earnings to the upside, ExxonMobil, another stock that had earnings that continues its uptrend. And the energy sector with oil is the only sector in the market that has an uptrend and is well bid and is positive in terms of sector performance. And not a lot of stocks, but stocks are part of their sectors in their performance. So again, XLE is the only sector to be bullish, rising trend, and positive on the year. The defensive names include Staples, XLP. That's a trading range. That's flat down for the year, but in terms of its trend, it's actually a flat sideways consolidation trend, neither up nor down. The same is true in XLV. XLV is our healthcare sector. So any trades within XLV or XLP, Staples and healthcare, would come within this logic of mean reversion. And that is just playing a stock or ETF long from beneath the mean or the midpoint or the average, and then potentially short or bearishly from above the average for the trade or the market to return to the mean. Again, mean being the middle. Those are some of the trades that would take place in a sideways consolidation. Now, the other sector that is in focus, it's bullish, but slightly not as bullish as XLE in terms of its trend, but is positive for the year. Not by a lot, but is positive. And that's the defensive sector of utilities. It still has a trading range, but it is sideways. And the same logic would play into the XLU, and that's a wide distribution, but that would be shorting from above, bearish or defensive positions from above the distribution, which is rising or tilted or skewed, and bullish positions, long or bullish, from beneath. And again, that just takes us back to the midpoint for trade ideas, and that is setting up another potential short sell opportunity. And to finish quickly, there are a lot of other stocks to discuss. We'll do so in future videos, but for the sector performance, XLF, which is our financial sector, is and remains, as the stock market does, which is in a downtrend, and their reward, we'll put that, their reward is at the downside, down away from 34, and the risk, but the risk or reward is down, risk is up for the financial sector. That will be true in the XLK, which is tied to the Nasdaq in the technology sector. XLY is consumer discretionary. It continues a downtrend, but has traded a little bit higher than is comfortable in most trading accounts, at least on the short side. And industrials XLI, similarly, although it had a very, very strong rally just recently. We're going to be carefully watching that. And we'll finish with materials XLB, which has been sideways and consolidated for the most of 2022, but it also is setting up a potential bearish sell side opportunity from 78 per share. So all these sectors will play into the broader market, and if they all turn down, the S&P and other stocks, other indexes will turn down bearishly. But if they all continue this bull or this bullish rally, bear market rally is the word we're using, but that would put us into question and put us into much more defensive and hedge positions above these current levels. And these are things we're going to be watching throughout this week and the month of August. As always, be careful and safe. This is Corey Roosevelt with tonight's Theo video update for August 2nd, 2022.